Hey traders, David Frost, LazyGapTrader.com. We're looking at a potential live trade coming up here in Tesla. We're looking for a level at 294.66. You can see it peeking through a little bit on the left side of the screen. I've got a line on the chart. I'm going to enter the trade at 294.66. That's where I have my buy order. I'm going to be looking for a quick bounce off that level. On Tesla, I know it's a high-priced stock, and a lot of traders don't like to trade high-priced stocks, but it's just the concept of the gap trading methodology that I teach. Doesn't matter whether a stock is 20 bucks or $200 or $300. There we go, I'm in. So it doesn't matter what the trade price or the stock price actually is. It's just the concept of the fact that this strategy works. On Tesla, you have to give it a stop that's my stop this morning is $2.50. That's the stop that I gave my traders out in the email that goes out early in the morning to my traders. We had a whole list of trades today. It's been a very active day. There's been a lot of trades that hit today. And so here's Tesla. I'm looking for, I'm probably only looking on Tesla. I've got a lot of stuff going on. I'm only looking for a couple of bucks at a Tesla on this trade. But first we have to get a bounce going, and it could certainly come down a little bit more here. You know, we're coming down a little bit more. If it comes down more than $2.50, I'm going to stop out of the trade. I don't expect that to happen, but you don't necessarily get what you expect in the market. You just have to abide by your stops because you always have to have an exit plan if things don't go your way. That's what stops were made of. You have to be able to come back and trade another day. This is a business where you have to be diligent and you have to understand that you're not going to win 100% of the time. So Tesla's hovering below the level right now. If we get a quick pop back below that level, my expectation is that we could easily see it get back to 297, which is pretty much the high of this current candle. But we have to get going here and get a bounce back over the 294.66 level. In my course at Lazy Gap Trader, I teach traders why this works. I teach traders how to calculate these specific price levels where we're likely to get a price reaction in the other direction. And sometimes it goes slightly below the level, sometimes it comes to the level and bounces immediately. You never know exactly where a stock is going to stop at, and that's why we have to use our stops. We're coming close to the stop level here. Not yet, but it certainly came close. So we need a little bit of a bounce in Tesla. You can see that the volume on Tesla today is very, very good. You can see I'm on a 10-minute chart, and you can see the volume at the bottom of the screen, and that's indicative of a lot of activity in Tesla today. We've already traded 10 million shares in Tesla thus far today. So it's in motion, it's active, and we're down at the 293 level. So, you know, we're getting close, but I'm not going to stop out just yet. Looking for a little bit of a rip higher. If we can get back above, 294.66, we should get a quick spike to the upside. That's the way these price levels work. The level should be supportive of the market. Here we go. Come on, let's get a little bit of a rip going here. Here we come. All right, so anyway, back to the concept. The concept is gap trading. We're looking for stocks that gap higher or lower in the morning. And when they do gap higher or lower, and it's generally on a news event or an earnings announcement or a combination of both, and what happens is when stocks gap higher or lower, it creates opportunity for traders. Here we go, fighting back. There we go. Now we should get a little bit of a rip higher. Here we go. So we're back above the 294.66 level. We're bouncing around, back below, above. Anyway, when stocks gap higher or lower, it creates an opportunity for traders. And the opportunity for traders is when they can identify a specific price level, and that's taught in my course, a specific price level where these stocks should first be drawn to like a magnet. And you can see Tesla closed all the way up yesterday around $320 a share, give or take. And so we're gapping down at the open. It's down 26 bucks from yesterday's close. 8%. That's a pretty good haircut. So that's opportunity. Day traders need volatility to be successful. We need opportunity to find price levels where these stocks will find support, first of all, and then have a price reaction in the other direction. In my course, I teach traders how to calculate these very specific price levels. There we go. Now it's coming. So I'm going to exit this trade if we can get it back up near 297, maybe just short of 297 is where I'll exit the trade. And the reason is because I've got a lot of trades working this morning, and I'm not going to screw around with Tesla. I just want to take my quick profit and go about my business. The business of day trading is about hitting base hits and doubles. Sometimes we hit a home run, and in my course, I teach traders exactly how to take advantage of taking some of the profit off the table and then letting the rest run and taking advantage of the fact that we do, from time to time, get home run trades. And if you have some of the trade left and you can take advantage of a trade that goes up multiple dollars, yeah, I just want to calculate something here real quick. I'm trying to do 9 things at the same time. I need like 4 hands here and I need 2 brains going at the same time. But anyway, I'm just trying to calculate my exit, and I just want to make sure that I've got this calculated right. I'm not gonna screw around with Tesla. It's not really acting as though the same way I would like it to. Now we close back below that level. I'm not in love with the fact that we close back below 294.66 on the following or the next current 10-minute candle. But if we get a quick pop, I'm going to exit the trade right around 297, maybe slightly before 297. Let's get that rip higher I'm looking for. This gap trading strategy works over and over and over again. Of course, you can't win every trade, but we certainly win the majority of the trades. And as long as you abide by your stops, we lose small and fast when we do have to lose. So, you know, it's just like in anything else. There we go. 295.5, 290. There we go. Now we're cooking. There we go. I'm going to get out in a second here. Just give me a quick pop back up to closer to 297, and I'm going to get out of the trade. So I hope it doesn't melt away. I need one more push higher in Tesla to get out of this trade. Give me, you know, about a $2 gain, and I'll be happy with that. Come on. I'm distracted here. I'm trying to talk and do this at the same time. Trying to make this trade and talk, and it's not easy. Come on. One more push. One more push. One more push. Give me another few cents. All right. I'm out of the trade. Okay, I took the money on Tesla. That's fine. It'll probably get to 297. But I'm not looking for a ton more because at this next, there we go. There we go. Here's going to be resistance right here. And it's probably going to come back down because the previous red candle high is generally resistance to the market, and it'll be resistance at least for a while. It may get back to 300 at some point today, but I'm out of the trade. Here's a live trade on Tesla. I'm David Frost, Lazy Gap Trader. If you want to learn how to do this for yourself, come over to check out the course, lazygaptrader.com.